All right, what's up, you guys? Welcome back to another video today. Just on my way back home from the gym. I thought I'd shoot a quick video regarding the yield curve inverting, and I'm going to talk about what that means. And if you're somebody who's kind of new to the finance world, this is going to be something that you're going to want to pay very, very, very close attention to. So the yield curve inverting and just the yield curve in general is a price signal that we can use as investors and market participants to signal to ourselves whether or not things are going to be good in the future, uncertain in the future, or not so good looking, coming into the future. So what the yield curve inverting essentially means, and what it has predicted 100% of the time, every single time the yield curve has inverted, there has been a recession within the coming 12 to 18 months. So this is not something that's going to be happening tomorrow. These things do take time to materialize. However, at the same time, we want to be certain that when this, happens, bad things generally come on the horizon. So there's a couple of different things that I see coming. This particular recession is not going to be the same as the last. I think we're going to see continued consumer price inflation while people and businesses are losing their jobs, going out of business, and so on and so forth. I talked about that in my most recent video explaining what stagflation is. And, in that particular environment, there's certain things that we can do as market participants to not only, try to preserve our wealth, but grow our wealth at the same time. So there's a few different things that I want to pay attention to and talk about very closely in this video. And that's real stuff that's hard to get. Okay. And we want to own companies that produce these real things that are hard to get and have clean balance sheets to go with that as well. In addition to that, we want to be holding fixed rate debt on assets that we own, like real estate. Maybe you took out a leveraged line of credit on your to buy some stocks or something like that. We want to make sure that that debt is at a fixed rate. If we can get that interest rate below what the rate of inflation is, then that's a transfer of wealth from the lender to the borrower. So the bank loses money in that particular instance, and I'm gaining, because what's happening is that I'm paying off that debt with cheaper dollars, and that's good for me, not so good for the banks. So, however, at the same time, with rates rising the way they are in this particular environment, people are going to be, and I want to talk about this as well, is just the flow of capital, right? So if inflation is going to be at a rate of like 7% or something like that for the coming, couple of years or whatever, and the central banks are going to have to tighten in that environment, and it's going to be tough for a lot of people if they don't have the debt that they have at a fixed rate, because the cost to service their debt is going to be going up. So it's really critical that if you have debt, that you just roll all of that over into a, in Canada here, we can get up to a 10-year fixed rate mortgage. Maybe a 5-year would be a little bit better for you. Definitely consider, going to a licensed financial advisor or a mortgage broker, somebody like that who deals specifically in the debt business. But in my opinion anyways, and this is not financial advice, you're going to want to stay away from variable rate debt, because the cost to be able to service that debt is going to be going up in this particular environment. So the reason why I think that the prices of things are going to continue to go up is because, although the central banks have control over monetary policy, they can't print goods and services. So demand, in a recession is going to go down. But I talked about this again in a lot of my different videos that I've made, is that supply of those goods and services can go down at a faster rate. So if supply is crashing faster than demand, well then naturally the price of those things that we're buying are going to be going up while demand is slowing. And these people in the financial media and stuff like that, they like to just really hyper focus on demand. How much stuff are people buying? There's no consideration as to what's being produced. They think that these things just buy pixie dust. Tooth Fairy waves her magic wand and voila, we have stuff on the shelves. Like, that's to the extent that these people think, and it's kind of embarrassing, to be honest with you. But because you guys follow the channel and you guys are smart and well informed, we have things that we can look at that other people aren't, that can allow us to make better decisions to not only preserve our wealth in this particular environment, but grow it at the same time. So again, I'm somebody who has a very big cash position right now, and I do participate in a trading strategy that I have. I'm working on getting that made into videos and stuff like that so that I can show that to you guys. But the most important thing is that if you're going to be participating in that kind of strategy, you want to make sure that you have a very clear entry point and exit point, and you have to be accountable to sticking to that to yourself. At the same time, I still have a position in a couple of different cryptos and oil and uranium as well, mostly energy focused, because again, even during a recessionary period, people still drive their cars, people are still going to be doing things, doing business, goods and services are still going to be transported. But again, at the same time, I've talked about this before, we've just seen such a malinvestment and just a mismanagement of the energy sector over the past number of years, that there just isn't the amount of oil or production that's needed in order to have prices at a stable level. So again, not financial advice, just things that I'm doing, and I just thought this was a little fun thought experiment to think through quickly, was just talking about what kind of assets I like to own in these kinds of environments. And so if you guys found value out of the video, be great if you hit the like button for me. It's free, and it's going to help get this information out to more people, which I feel is super important. At the same time, if you like this no BS content and approach that I like to take with financial markets and financial education, then be sure to stick around and subscribe, hit the bell notification. I post 2 videos a week, and like to keep it super chill, super fun, and hopefully you guys get some value out of these videos and are able to be a little bit better informed so that you can not only survive but thrive at the same time. Anyways, have a good afternoon, and we'll talk to you soon.